Good weekend, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up's for a pretty wild metal day, I'll tell you. It is Friday. This is where we do the weekly charts. It is September 29th, the end of a quarter, the end of a month, and what a week and what a day today was. Look at silver. You went from 23.80 to 22.32. This morning, I'm watching it. I'm doing the early morning update, and I'm going, we're up $100 an ounce. Why? I'm looking at the news. I could find nothing. It looked to me, I could be so wrong, but I got a lot of experience. It looked like what's called a fat finger trade. And what a fat finger trade is you don't hear about them too much anymore because the government really fined the firms where this happened. And it's a type of trade where, let's assume a trader wants to buy a 10 lot and he hits an extra digit, he does 100. Or he wants to buy 100 and he hits an extra digit, he does 1,000. So what firms were supposed to do, if this occurred, I don't know if it did or didn't, they're supposed to have price parameters put into their trading. Well, somebody bought a heck of a lot of silver, and in no time at all, mornings when I'm starting to watch it quickly reverse. It goes from 23.80 into the close. It's making new lows almost. We're talking $1.50 break. Come on, this is monster move in the silver market. So do I know what went on? I don't. Am I speculating? I absolutely am. Education, years of experience, something going on. Now, where we're at. It started off this morning, obviously, with the UAW. Well, actually, it didn't start off there. It started off with a piece of good news. The PCE, the price indicator, the Fed, one of the Fed's favorite tools, got under 4% on a yearly basis. Folks, that's a big event. It's going in the Fed's direction. Market was happy with it. Stock market, in fact, was higher on all that news. People are going, they got it. It's not going to be interest rates higher for longer. Really? You only drop 3/8, 3/10. If you keep dropping 3/10, how do you get to 2% quickly? That's a big drop. We're going to have things that now come in there that hurt that. Why? Because while you don't count food and energy, when energy prices are as high as they are, they embed into the economy. It could be transportation to move a good. It could be the cost of making plastics. It could be other things. It just permeates through it. So I'm expecting that the Fed knows that. This number's probably not going straight down here because of how that is working. That's my guess. The other thing was the United Auto Workers came out, and now they're striking again. Now they're going after Ford and GM. Stellantis got to sit this one out. So they got a get out of jail card. Remember the Monopoly game? You've all played it. They got a get out of jail card for a moment. But I don't see how any of these can afford it. Yet the union is going to do this. The union is going to point at United Airlines, which today reached a deal with their pilots. And they're going to say they got an overall 40% increase. Remember, they'll go by headline numbers, not facts. That's just how it works. We want similar. We're already down to 30% we'll take. We want pensions. We want all this other thing. And the auto companies got to look at it and fight it, all right? It's not just that. It's the legacy of it. What's it going to do? How they're going to make money? Where they're going to go? These companies went broke recently. Most auto companies do. And they learn from it, and they learn what they can do, what they can't do. The neat part that they got a shot at and they got to put in the equation is how many workers are they going to lose due to electric cars over time. When does that kick? If it doesn't kick in the next 2-3 years, you can't take that whole workforce and give them a 40% increase. So behind the scenes, there's a bunch of bright people bringing this on, and they'll figure out what has to be done. Is it going to end anytime soon? No. Is the union going to run out of money soon? No, not even close to it. They have $800 million. I think they might have spent $30 million so far, something like that, on the strike as it goes, because they're being very selective on how many they're coming on. This thing can have legs. Then we get to the government shutdown. And that government shutdown is a bunch of fools at work. You know it. I know it. I think they even know it, the people in Congress. They had plenty of time to work this all out. But this is where you get your political cash. What do I mean? You got an election coming up soon in November. You have to have something. Those son of a gun dysfunctional Republicans in the House, they can't get anything done. That's the Democratic part. The Republican part will be, because they are dysfunctional, they're going to say yes. However, look at the border. We have to stand up for something. This can't go on. The cities can't handle it. The people can't handle it. And then we don't have the money to keep adding money to programs. You got to cut that back. So at the end of the day, your election 2024 is set. It'll be Biden, it'll be Trump. Don't go by polls. You never know how they're going to work, okay? Polls can be manipulated, but I think that's where you're at. I am not saying there aren't some good candidates out there. I'm saying they aren't gaining the traction, and you need traction. The idea they're going to bring up this gentleman from Virginia, and he's going to be the savior of the day. Politics, anything can happen. I'd never say never, but I got my doubts. That's all. But now you know where you're at. The fight's going to go on. It doesn't get resolved day one, day two. They, in the past, have averaged 8 days. Recently, they've averaged, if you go and add up the recent shutdowns, because shutdowns aren't new to America, they're about 18 days. I can see that more, somewhere between the 8 and 18 is my own personal guess on it. And I don't look for the miracle that it's all going to get resolved by Sunday morning at 12:01 a.m. When you look at the gold, it's pulling back. Gold is probably caught up in the interest rate play higher for longer. And the question is, can it stay over before getting under the 18-week average, under 1850, and shift the bias to the downside? On the weekly chart, you're under it. The bearish bias is set in. On the daily, you have yanked, and this isn't daily, this is the weekly, you have yanked the bottom from under the chart. If the market wants to go back to major support zones, it's back to the 1600 level that, in all honesty, I thought we'd have been at already, all this happening. And I was surprised that the market kept getting these rallies. Okay, just how it is. I'm entitled to be a fundamentalist in my thinking, but I should be punished if I'm anything but a chartist in the trading. Got it? I really believe that. So in looking at the chart now, lower highs, lower lows, bearish until the market gets over last week's high. The first support is the 100-week average. If that gives ground, the next major support's 1812, the 200-week average of closes. Remember, a 200-week average is a 4-year average. That's a heck of a long average. And the Bollinger Band, you're under. So the Bollinger Band now, if you don't pop right back into it, 1812, $36 away, immediate target. It's got to prove something. Is the market oversold? Oh, yeah, it is oversold. Could I tell a client to sell short under a Bollinger Band into the first challenge of the 100-week average where we haven't been back here since March? I cannot. Doesn't mean that the market won't go lower. I'd rather not tell my client to do that. It's that simple. Is there any reason to be long? Zero. There's a difference between adding to shorts and a difference wanting to push on that. Gold-silver ratio, gold is gaining. I've got the chart in gold because you're over the 18-week average, which means silver needs to add more ounces to get an ounce of gold. In the silver market, as I said, I don't understand today's action. You carried the market on a weekly basis right back to the 18-week average, and with this action, you destroyed the chart. Now you have an outside week down. So over the next 2 weeks, unless you take out this high, the objective is to get to the lower Bollinger Band of 21.96. I wish I could say it's far away. It's 50 cents. It's not that far away. In the copper market, I don't get it. If you're watching Evergrande, Country Garden, all the other different big properties that are in trouble, the government pulled the quickie again there. This is why I hate the idea of investing in China. And what they did is they allowed the Evergrande to go out and negotiate a deal, buy time, and some, by the way, other property developers. And they did it with a mixture of getting 3 years worth of time to work out of their problem, paying interest and so on. I'm sure there was a certain amount of write-down. And for that write-down, they probably had to give stock in their company. Well, the government came out and basically said, you can't issue more stock. They stopped trading in the company on the stock exchanges. Now the creditors are going, what the heck? Now what do we do? And this could be the forced liquidation. There is supposed to be, out of the Hong Kong courts, a declaration by October 30th to say what's going to happen. I fear you're going into full-fledged liquidation of these things. Can't answer why. I can't speak for the government there. I don't know. I don't have all the facts, clearly. But in looking at the market, you're at a resistance point up here in copper. Why do I want to own copper if there's an implosion in these companies happening and all this is going on? I'm not hearing that the government's saying, yes, we're going to start expanding and do more infrastructure. Are you hearing any of that? Because I'm not. So I don't know why people are buying copper, but I wish them the best. Platinum and palladium, one of the things that bothers me, and I always like to understand markets, is, gee, they're not going to be building as many cars in America. I get it. Abroad they are. They're doing whatever they do. But, gee, does that mean, do I need catalytic converters the way I did? No, I don't. So for my domestic market, why do I want to own platinum and palladium? And I can understand the bearish play, 873 coming in to go. You got to throw that thinking out. If you get over the 100-week average of 971.60, then I don't know what's going on. But until then, I'm very much fundamentally in the bear camp and chart-wise. As for the dollar, you fight it. I don't want to fight it. It's higher for longer on interest rates, maybe a lot longer, and a lot higher. Could be another 0.5 point in all them. We're not going to get data that the Fed can look at for the whole month of October, from what I can see. That means if they get data, it'll be at the end of October into November, right before the next Fed meeting. I don't know what they're going to do with that. You know, if you don't have the data, you don't do anything, is one school of thought. And then you wait for the next meeting, and if you're going to raise rates, that's it. I think this just throws everything into a way that you can't figure it out. You got to go by the private data, but the Fed likes its own data. And if they don't have people working there to give them the data, you tell me how you maneuver other than guessing game. And by the way, it's always a guessing game. It's just you have a more educated guessing game than you do with no data. So as far as I'm concerned, the trend stays as it is. The dollar stays bullish until your red line closes under 79, higher for longer. What do you do without all this government data? I hope you come to us. Number one, we have a team of writers. Number two, experience. Number three, options, futures, derivatives, option plays, spreads, what's going on, cash markets. My firm, Linn, runs on all this. This is the information I think can help you out. I'm sure we're upping already in our platforms how many charts a day we're publishing with the price counts, trying to give you an idea that when a trend sets in, where might it go? We're the only ones I know that have this. In fact, I know it. It's a proprietary tool. We've never given out the formula. The Linn, I'm talking we being the Linn Group, which I am part of, and all the other tools we have. This is when you need them. The charting software, get a free sample of ours. Take a look at both the QT with all the weather and all the shipping information and everything. If you're a grain merchant, this is your dream come true. I've never seen what we have in anybody else's information. Then the other charting software for the more traditional person. But I think you'll find what we offer, and we want to give it to you free, is worth your taking a look, because you're flying blind right now. How do you get all this? Move your cursor up to the top, Ira Epstein, you'll see. Free offers. on the website. Go in, you'll see a whole cart you can choose from. Choose what you want and let us get you set up. You're going to need it. This is not going to get resolved right away. I think you owe it to yourself to at least take a look at some of the other products out there. I'm Ira. Have a great weekend. I'll see you Monday.